Hello, everyone, and welcome to another Monday Motivation. I'm your host, Daniel Krakowski, joined, as always, by the prodigy, the kid,
Andre Anderson.
Oh, thanks, man.
Yeah, we are also joined today by Andre Anderson, local superstar, real estate agent, advisor.
Thank you for having the guts to jump in on a hot Monday, end of day, to do a Monday Motivation with the crew.
Hell yeah, I'm always here.
Man, you're so motivated too.
Hell yeah.
And the first question was, what's it about? And what did I say?
We'll do it live.
We'll do it live.
But so what I wanted to talk about is just keeping the hunger going and really willing yourself to take those risks. Because last week we had Marshall Saunders come in and he spoke a little bit about equity investing. And when he was speaking about it, he gave us this really nice preamble that I think if everybody who was consistently contributing to their IRA, their 401k, saw they'd really get the perspective as to why we do what we do. Don't you think?
Yes. And by the way, what a great event with Marshall Saunders. Thank you for showing up. And if you guys want to listen or watch it, it's too bad because it was a live event. But you can actually listen to the podcast that we had with Marshall.
Read his book, M3.
Yeah, M3. How many
He's my mentor
months?
And doesn't even know it.
Wow. Yeah. Mentor doesn't even know it. But it was a great event. When we have next one, we're going to try to go Facebook Live. It's going to be recorded, so you'll be able to watch everything that we're talking about. What a great speaker, what great content. And I knew for the most part about 80% of what he was talking about. Mm-hmm. But even if it was one thing that I got, the one thing that I got could really just change your life like immediately.
For sure. Yeah.
Right. And how many people do we know who are thinking? So, I've been doing more thinking about the way that people invest and the way that they consider it. And I was speaking with Ryan actually about it today. And my thought was it's very, very difficult in general to get people to want to save. There's an inordinate number of people who are living paycheck to paycheck.
Look it up, kids. Look up the word.
Right. But it's true. So there's this many people. Anybody just willing to take a portion of their paycheck and stash it away somewhere and not immediately spend it on some frivolous, a new car every 2 months, an ATV, or insert
all things
whatever.
that Daniel has recently gotten.
False. I have none of these things.
Just kidding.
But just getting people to be able to budget some of that stuff for themselves is amazing. So these programs like the 401k matching, just putting something in an IRA, it does make a lot of sense to a lot of people because it's forcing them to set up a plan for how they're going to save money. They're not allowed to access it basically until they're 59 and a half, right? Until retirement, essentially. Yeah. But what Marshall did such a great job of illustrating is that 3% of the wealth that is generated through investing that's out in the marketplace, not a 3% growth, but 3% of the wealth that's generated in our economy is attributed to those types of programs, these SEC approved investments. So, people putting money into their 401k.
Well, and also what the more crucial piece of the puzzle is who gets the biggest benefit or financial benefit from that type of
right. There's 97% more, of this 100% that exists out there of people who are actively investing it, actively managing it. So when I hit and make a deposit in my 401k, I'm getting 7%, whatever, right? Insert your number. And all that money is going over to some proprietary trading company out in Wall Street, and they're reinvesting that. And they know it's like a promissory note, essentially, where they know the term is not going to be called for 35 years. So they have free range just to take that money, invest it, loan it out, do whatever they're doing with it, and generate revenue. And,
and for the most part, make 10 times what you are getting on your money by investing with them.
if not more.
Right, much more. They're just constantly flipping that over and over.
Right, and he made that point very clear, and I think it was a lot of people know that, but he also mentioned another point. Maybe you can recall a little bit better than I did regarding the people protesting. The 1%, what they really should be protesting against.
Yeah, so he made a very great point about there's a ton of regulation that exists in terms of who has access to different investment vehicles.
Yeah, aka just general access to wealth.
Right. So there's an accreditation process basically for investors. It's very simple in most cases where you claim to be an accredited investor. But really what they're looking for is for a single person having an income for the last 2 years greater than $200,000. For a married couple, $300,000 or greater. There's also a net worth of over $1 million, which excludes your primary residence. And he didn't touch on this, but I also think that there is a point for owning a business that has a valuation of over $5 million. Do you know if that's true? I think that's right. Someone fact check that.
We'll just say it's right.
Yeah, we need a D-Rock. We need a fact checker.
Yeah, any facts are,
But regardless, the amount of people who meet that criteria, do we have a stat on that, Goran? I think it's like 2%. It's a very small.
I think it was 3%.
Yeah,
or so.
It was a very
And Marshall
3%.
Saunders was saying like it's only 3%, but a lot of the people that I know fall in that 3%.
Right.
I think it's less than that. I think it's less than 3% because
2 and like 3/4.
Yeah, I know the 1% is.
What's interesting is he said that most of his acquaintances and friends fall under that criteria, which is great, but then also gave him kind of like, hey, what about
everyone else?
Right. And how do you bridge the gap, and how do you empower everybody else to get on the same page?
Yeah, and there's no question that people with more money have the opportunity to use that and leverage it to make more money, right? Like that's something that everyone understands. But what he's saying, and I'm inclined to agree with, is that in general, it's really difficult if there's not even a level playing field. If you have $5,000 to invest, and I'm an accredited investor who has $200,000 to invest, and either both of us can double our money over 5 years, okay, it's a somewhat level playing field, right? We both have capital that we're able to put to work. I just may be further along than you on my investment path, but what's really crazy about, I believe Regulation D, right, is that
Reg D, yes.
Yeah, it prevents and precludes Andre from even making that investment.
It's illegal for me to do so.
Which is crazy.
My 5,000.
So,
well, it's not. It is crazy that it isn't. It's the old money from the early 1900s that had it pretty good as far as we're wealthy and now we're going to make rules in our favor to prohibit others coming up to our level by making it illegal or making it very hard to get to that level.
And I guess that there is some subtext that exists that's why these rules continue, but as Marshall explained too, in that wasn't the initial reason why that came into place, right? Do you remember why?
Yeah, right. So right around the Great Depression, right, everybody was just like starving, like a quarter of the population unemployed, right? And so there was a lot of people going around proclaiming they had great investment deals. And one of them that he gave an example on was he was going to, like people were going to like different farmlands or whatever. And they're like, hey, there's this great farm out in Florida that I'm going to sell. Yeah. And they just end up being swamps. So there was just a lot of kind of scams or misleading investments that
the unsophisticated.
Yeah, I know. This is. I don't want to go into the whole fear mongering and if that's really the truth as far as we're doing this to protect the general public. Meanwhile, it's all these things that are protecting you from me being able to pull other people's money and making it illegal when somebody else that has the same power to do so, is making like extreme wealth. So, but really the point of his talk is how you as a regular investor, can actually with this, with current things in place, that you are able to, pull other people's money together in a way or in such a way where you can then crowdfund or invest in bigger and better projects in order to improve your community, improve your financial status, and not just yours, but also people that they're investing with you. Mm-hmm. And what I like about his venturenear.com, if you want to check it out.
Shout out VentureNear and Marshall Saunders.
Right, is that
Daily.
The concept of people who are in the neighborhood knowing that XYZ building is there, and somebody like Andrea could be like, hey, this is a great investment, I need $1 million to pool from 10 people, and gives a sense of ownership to everyone within the community if they're investing into that building with you, so you kind of all help each other,
right?
And that's what I really liked about it, which is what his whole mantra and his business, the platform is all set up for, is not for these rogue investment tactics in penny stocks or high frequency trading. Mm-hmm. It's really just about how to pool other people's money together legally without having a securities license, get into real estate, open a brewery, start a business.
Right. So yeah, basically what they're focusing on is just the rules for general solicitation. But
yes.
I'd like to move back from that and go more into the abstract and just talk about, I think most people just don't realize that what they consider to be a prudent investment is actually not as prudent as they think, and not really wanting to understand the best way to use things like leverage,
right.
Other people's money, and then as a form of leverage, other people's time is another form.
Yep.
to generate wealth, to generate what they think they're doing. I've heard the expression many times, no one's gotten rich from their 401k. Mm-hmm. And I don't know a ton of people who are like, I'm worth $100 million, really hit that 401k hard when I was 18,
yeah.
and now I'm here. That it's a great way. It's almost just a way to save. Think of it as just
it's a backup plan.
It's a better way of putting money under your mattress.
And he gave that analogy in his talk about Bill Gates. He made his wealth by owning a company, and not because he was just a wise investor in XYZ fund. It's about the success of the company. And even Warren Buffett, he did invest in stock market, but he actually went to every single company that he invested in and saw the operation, and that's what he invested in. He wasn't just some XYZ stock where he's in and out. Mm-hmm. So the fundamentals, and they're actually really simple.
Right. But I think what people in general have a hard time explaining when you're an investor in real estate like we are to someone in the general population, mm-hmm. is just the opportunity that exists. And I think the barrier for a lot of people is that to do this successfully, you need to have a lot of time spent in that. If you're working 45 hours a week at some 9-to-5 job or whatever,
yep.
Most people don't feel that they have the time to go out and learn all these things. So if you can't go learn it yourself, you have to find someone who who you can leverage their skill, yep. to be able to educate you, to be able to help you decide where to put your money to make sense. The difficulty with that now is that there's a trust component that you need to quickly establish with someone as well.
Right.
And I think that's really, really difficult to do, because the people who you tend to trust the most are people who are very, very close to you. So, which creates another problem, I think.
Family and friends.
Right, family and friends. You don't want to be in a position where you lose your family and friends' money. I would rather invest with other people.
Rather lose strangers' money.
Right. Well,
I always looked at that and like, well, would I rather take a stranger's money and lose it, or would I just say I'm going to invest with friends and family with the mindset that I'm not going to lose their money, that I'm going to make it,
right. Well, I think
viable investment.
I think the difference though is with family and friends, you already have a pre-existing relationship and it goes beyond money. Whereas when you're doing things for business, there's already kind of an assumption, or at least there should be some education component where there is risk to all this stuff, and we're kind of hedging all of our bets right now. But of course there is that risk, and so money tends to become in a business relationship much more open and like more for a discussion, whereas with the family and friends, it's like, hey, like I was there for you on like your 13th birthday when you fell down or something like that. And like money can really, for those existing relationships, they can be a very difficult topic and just in general. So
I agree. And your relationship isn't predicated on investing. So you have to redefine your relationship with someone that you've had for a long, long time.
I think that also just going back to the friends and family, for most people, like, oh, I don't know if I want to be on the hook. I think those are the first people you should, if you have a great idea for an investment or a great idea for a business and you really truly believe in it, you should really go, and most people have, after the people that with friends and family. See if they want to invest in your idea, not strangers who don't know you, because ultimately they're going to be investing in you, not your idea or how much they believe in it. And that's what Marshall was saying, that
for sure.
A lot of his success is because of who he is as a person and them trusting him.
Mm-hmm.
Right. I take your point. I tend to just view it differently in terms of reaching out to my friends and family, because it gets weird too just talking about finances. If I'm would you like to invest? Give me $100,000.
No, I think
bad news.
Deal.
I have $40.
Yeah, the Grant Cardone says this a lot too. We haven't said GC in a long time, so shout out
Grant Cardone.
He's just doing bigger and better things. I'm trying to catch up here, but if you're not talking about the money, then you don't have the right friends and acquaintances, right? You need to be talking, a lot of people, and I think, the mindset of people, or I don't know, people that I want to avoid are the people who are scared to talk about finances or think it's a taboo topic.
How much money you got going?
Right.
Yeah.
He does that. GC asks.
I know. I just asked you.
Right. I'm not going to answer that. I'm not on that
got
level.
it.
But he when Gary Vee was there, GC was like, how much money did you make last year? And he was like, kind of looking at him, was like, how much money? Come on. He was like, 13 million. Right. But still, on air, it's different than if we're in a private setting. There's like three of us
or something.
Right.
Like that.
Right. And you're like, hey, Daniel, how much money did you make on the deal? He's like, 150,000. And then I'm like, well, how'd you do that? And then he tells me the deal, therefore empowers me to potentially make the same dollars, and it gives me the opportunity. So right there, by talking about it, you're bringing the situation or the opportunity to light. So then I can learn from it, and potentially, I can get on his level. So that's where I see the benefit. And I used to do this when I was younger, 12, 13, 14, with a couple of my mentors. I always be like, "Whoa, how'd you do that? Or how did you make this transaction happen?" It wasn't about me trying to gauge how much money they have or some kind of a scorecard. It was just about me trying to find how the deal was done to get to that result.
Communication and
so
education.
I encourage everybody to talk about it. And if you see me on the street, ask me about it.
That's a good point. I think being able to talk about that, because I know that definitely when I don't even need to talk to you, because I write the checks so I know it's a lot. Okay, yeah.
It's a lot. I gotta print more checks.
Right, but we do talk about it, and I think that's really important and something that's really good to know. I have another friend who feels the same way. He recently went through a situation, a divorce, and we actually talked about. He's like, this is how much I'm going to have after this thing. What should I do, you think? I'm like, you need to buy a multifamily property and live in it, rent out the other side.
Would you have said that if he didn't say anything?
No.
Exactly.
Bam. I was like, that's the opportunity. And again, my parents say the same thing. The money is not something you talk about. And I'm sure your parents said the same thing.
Right.
But then I'm like, well, wait a minute.
But why?
Am I trying to mimic my parents' financial status or somebody else's?
I think this all loops back to a main point that Marshall Saunders was talking about, and like having capitalism, and you're wanting to have everybody have those opportunities to create wealth for themselves. And perhaps even one of the huge components that why it isn't existing in our culture today is that we're not open and talking about it.
100%. It's suppressed, and you see it. That's just how you are raised. And Grant Cardone proves this point time and time again. He makes those videos, goes up to people when he says, "A penny saved is what? A penny."
Wasted.
Yeah.
Well, penny saved, penny earned, but
that's
the typical answers that everyone is giving. But you guys gave me the right answer. It's wasted. It's just a penny. In his case, he just said it's just a penny. You only got a penny. You're not saving pennies. Got to go after the big bucks. So it's like we're all programmed, or for the majority, we're programmed in regarding money and the monetary system in general. But Marshall Saunders, his entire event brought, I think, a lot of enlightenment. And I think it was your first time, Andre, meeting him.
Yep.
So what did you think, and what did you take away from his discussion?
From his event? I mean, I think there are so many components to it where it was just getting some insight into a guy that has, taken a lot of different companies and going into a lot of different things. So, his experience with Remax results and buying and selling it, that was really nice to learn, as well as just like that historical component that he talked about, where he was talking about Regulation D, accredited investors and everything like that. And then he started getting into the venture near.
Yep.
Right. And it just opened my eyes to that crowdfunding piece where...
Did you have a sense of empowerment that now you can go out and raise the money for a $10 million deal that you think is a good deal?
Oh, hell yeah.
And that's what I love. And it's really great, and I hope that everybody else got the same empowerment, that it's not just reserved for these
lofty
the democratization of capitalism and allowing it, have you registered as an accredited investor ever?
I have not.
Okay. If you do, you will find that you will be solicited pretty heavily, because that list exists and is sold, circulated, and people...
I should get that list. When Ryan and we did the 506C...
Right.
God, what is the website? Maybe you guys can even check it out.
VSM Fund 1?
Yeah, but it's VSMCapitalAdvisors.com. You can actually see all of the documentation that we paid an attorney big bucks to put together, that's for the 506C or the crowdfunding. And we actually, you just go through a simple sign-up process. It's free, but you get to see all of the documents that we paid for and see what that looks like, where you can actually now use and solicit for.
But it's crazy to me that if you're not in this, like the cool kids club, basically, which, once you're in it, it may be a little bit annoying to get all these phone calls, emails, whatever.
Yep.
But if you're not there, you don't even know what's being offered to people. You don't even know the deals that are out there. You don't even know the investments that are happening. All you have is, this is the stock market. This is where you put it. And you get a financial planner who's telling you what to do with your $60,000 a year, giving you terrible advice so they can collect a 1-2% fee to manage it, when they're never ever going to tell you to actively invest
they don't
and manage
know
yourself.
And
because they don't know, but they also don't get paid.
Yeah, you're streamlined into that kind of life with the schooling, the way you go through all these points in your life. So to break away from that is tough. And real estate, what a great way to get into all these different worlds, and including crowdfunding. And we've done that ourselves. So we know that you can get other people's money to buy real estate and make a profit. I like the story that he mentioned about an individual in Minnesota where he finds a deal, he buys a deal, gets bank financing for it. He puts 25% of his own money, but then goes and finds investors to buy into the deal and then take his 25% off the table. So he has equity into the deal without any money. Mm-hmm. And I mean, who wouldn't want that?
It makes sense. Yeah, no, it makes sense for the issuer. It also makes sense for the people buying it, because they know exactly what the property is going to be producing, because a lot of times it's already been stabilized, so you know exactly what you're buying into. But I'm not done with financial planners yet.
Oh man!
Yeah.
Don't you have a couple friends that are financial planners?
I do. They're probably not listening right now. But
okay.
I was meeting with a financial planner. This guy was,
when?
Year and a half ago.
Okay.
We were talking about trying to work some synergy between our businesses here. And, he's like, here's that I have a couple bucks to squirrel away or whatever. And, he's like, yep, like, this is what you do. This is how you build long-term wealth. This is how you build success. This is what gets you, where you're really trying to be. This is like the big money. And I'm looking at this guy, and he's selling me like a service that I'm going to pay him like $1,500 for, that I'm sure he's splitting with his company.
Yep.
And he's been doing this his whole career. I'm like, why are you taking time to meet with me? Who cares about my, like, you know what I mean? Like, I'd imagine that Donald Trump, not to use an inflammatory figure again,
Shut up, POTUS.
but a successful businessman, successful real estate developer, he's not meeting with people to try and make $1,500. Yet this guy who's, promising me all of these things, promising me these returns, is taking the time to meet with me about managing my finances. Seems a little bit crazy, actually. It's like, it doesn't add up. And it goes right back to what Marshall was saying. I mean, that 3%, that's in that 3%. And everyone's in this realm fighting for the same 3%. And there's, 2-3% of people fighting for all of this other money, this 97%. There's way less competition out there. And, if you're an investor, if you're serious about your future, whether it's real estate, whether it's starting your own business, whatever you're doing, you need to get yourself in the mindset of getting and competing in that 97% market, not that 3% market.
Boom. Also, another point that I really like that he made that seems to be escaping me right now, but no, I'm just kidding. The fact that I think a lot of people that are going to go, that's great. You guys are talking all these great things, but I just don't have any money. Right? That's going to be number one objection, I think, for everybody that's listening and, doesn't want to invest because they don't have $10 million, right? But Marshall said that, just as we know in our world, in his world too, a lot of people, there's an influx of money. That's not the issue. The issue is really getting that right deal. And it doesn't matter if you have zero money, you can go out there and search for the deal. Bring the deal or find the deal and bring it to somebody that has the money. There is not a shortage of money, and there is not a shortage of people that have the money. If you have the right deal, the money will happen. You can call me, and I'll be the first one.
Yeah, I'll be number 2, but call me first. But so I'm leaving town. I'm going out of town this Wednesday. I'm going to go learn more about commercial real estate.
Shout out learning.
I do not have $10 million. I'll tell you guys right now.
9,000,000.
We're talking about financials.
999,000.
I do not have $10 million, but I want to go learn how to find $10 million deals, because if I can find the deal, I can find the money. So get out there, educate yourself, find what you're interested in, what you're passionate in, make that your ability, what you're searching in that 97% realm for, something that you care about. Go talk to people who have done it. We've all done it. All of our contact information is on the internet. If you type my name into Google, I show up.
There.
My phone.
I'm finally beating that attorney in New Jersey.
Where's the ring?
So please reach out. People who are investing, continue to spread the word. Encourage people to, see it your way and understand it, and realize that, you're doing things correctly if you're being diligent about it and you are trying to build something for yourself. So hope you're all motivated. We'll catch you next week.
Thank you.